You have $9 billion on your balance sheet. Arguably, if you're providing effectively all of your stock and then the cash that gets you to 20, you have this letter from TD. That's another 20. We're now at 40, but we're still off by, call it 16. And the 20, as far as I understand, while it's considered a highly confident letter, meaning TD saying they're highly confident that they would provide the financing, it's not locked financing.
Yeah, we'll see what happens.
Ladies and gentlemen, welcome back. My name is John. I got options. And today we are talking about the GameStop and eBay situation. So the situation is GameStop, the CEO Ryan Cohen, is attempting to buy eBay for $56 billion, which equates to $125 a share for eBay. Now, what's interesting about this is GameStop's market cap is $10 billion as I make this video. It actually went down 10% today. So what came out today was a great CNBC interview of Ryan Cohen with Andrew Sorkin from CNBC and his co-hosts. And we got to go through this interview. This was amazing. Either the guy is a genius or he's absolutely nuts. And I don't know, but guess what? I'm here for it, and I got to bring it to you guys. So let's jump right in. The premise of the situation is GameStop is valued at $10 billion, and they want to buy eBay, which is valued at $48 billion right now, but they want to buy it for $56 billion. So in order to do this, it's possible. It happens in the market, but it's difficult. And the only way to do it is with a lot of debt and a lot of dilution of GameStop stock in this situation. So why is Ryan Cohen trying to do this? The reason I believe he's trying to do this is because he has a massive stock compensation that he's trying to get paid out on. So I went in a little chat GTP, TPP, and here we go. We got the pay package for Ryan Cohen, his compensation plan. So his largest payout is $35 billion if he hits all the tranches to his compensation package. And it's a lot like Elon Musk's comp package where it's aligned with the shareholders. So the first tranche is a $20 billion market cap for GameStop plus $2 billion in EBITDA. So if he hits that, he's going to get his first paycheck. Now, he already owns 8 to 9% of GameStop stock. So is it possible for him to even do this? That's the next question. And what's crazy and what came out today was this interview with CNBC that we're going to play right now. We're going to jump right into it because this was amazing. All right, let's jump right into it.
Invariably, the audience, and I know a lot of people are going to ask, how does the math for you? Given the price tag, $56 billion, given the market cap of GameStop, which is a fraction of that. I know you have this $20 billion financing letter from TD, but sort of walk us through how you could get to that price and how it would work.
So on our website, it's half cash, half stock, but the details are on our website.
Can you help? I've read them, but can you help our audience understand them?
Yeah, which part exactly?
I think we can start with the idea that the market cap of GameStop is, call it, $11 billion. You have $9 billion on your balance sheet. Arguably, if you're providing effectively all of your stock and then the cash that gets you to 20, you have this letter from TD. That's another 20. We're now at 40, but we're still off by, call it, 16. And the 20, as far as I understand, while it's considered a highly confident letter, meaning TD saying they're highly confident that they would provide the financing, it's not locked financing.
Yeah, we'll see what happens.
That's his answer. We'll see what happens. I don't know if he's just messing with them, if he's trolling them, or if he's legit. He's got the Jensen Huang NVIDIA leather jacket on. I don't know. But Andrew pointed out right there the basic math that everyone's doing, and they're trying to wrap their heads around how is this deal even going to be happening? Because allegedly he has $20 billion in debt financing from TD Bank, and then he has $9 billion in cash on the balance sheet. So you're at 29 there, still very far from 56. And then we have the GameStop's market cap, which is about 10.6 billion now. I know he said 11 here, but it dropped 10% today. So even if you diluted all of your stock, you get like maybe another 10 billion. So you're at 39 billion, you're at 40 billion, and we have to get to 56 billion. So you're about $16 billion short to make this deal happen. So either he gets more debt, maybe, I don't know. Now, my personal belief, what I think Ryan was hoping for when he made this announcement to the public was that GameStop stock would shoot up. And by it shooting up back in the old days, then he would be able to dilute the stock and get a bunch more cash that he could then use to go ahead and acquire eBay. That's what I think Ryan was thinking when he made this announcement. And that might be why he's acting this way in this interview, because he might be a little ticked off that his game plan didn't go as he planned. Or maybe I'm wrong. Maybe he's got another trick up his sleeve. I don't know. But I want to get to another part of this interview where he kind of does make a case for why he should take over for eBay. And maybe this is his way to get to that 20 billion market cap and get to that 2 billion in EBITDA. But let's jump to that part of the interview now.
There's an opportunity to build a much larger business, to make the business much more efficient and to accelerate revenue growth. And eBay's a very strong business. You look at GameStop as an example. GameStop, very difficult business, should have been bankrupt multiple times over, and it's doing okay. It's making a few bucks. eBay is in a very, very strong position, but it could be in a much stronger position, and it could be a much larger business than what it currently is.
Ryan, you mentioned that GameStop's in a tough business. I mean, revenues are down like 40% in the last 4 years or something like that. eBay's been a public company for a couple of decades. Where's the evidence that you kind of know how to grow a mature consumer business?
I don't know. I mean, didn't you guys call for GameStop's demise multiple times? Like it should
So
have
it's
been
not
bankrupt
dead,
by
therefore
now.
you know
And
how
look
to
at
grow
our,
it? Is that what you're saying?
well, look at our financial performance. Is it better than you guys anticipated? Because you guys said it was going to be doing really, really poorly, and it's actually doing okay.
Getting salty.
Ryan, let me come at this a slightly different way. Assuming that you were able to get this half cash, half stock arrangement effectively by diluting your shares, I imagine that's how you'd have to do it, but I still don't understand fully how that would work. And you were able to capture more cash from others. In terms of paying it down, can you walk us through the math of that? Because if you look at both of these companies in terms of just how much cash they produce, it would be a tight bill.
Did you look at the materials that we posted online?
I have looked at the materials that you've posted online, but we also have an audience that I'm hoping is going to want to understand this and hear from you so that you can walk through this, because people do look at these numbers and they say that they're trying to wrap their head around it. I don't think that everybody automatically says, oh my goodness, this absolutely makes 100% sense, and he can write the check tomorrow, and if he wanted to close the deal tomorrow. In fact, I am sure that if you were the CEO of eBay and the board of eBay today, you would say, I don't know whether they have the money to be able to do this, and they're watching us now, and other investors of eBay are watching us now, and they're not going to call eBay's board and say, you need to talk to these people unless they understand how this all is supposed to work.
Well, we have a 5% stake in eBay. It makes us one of the largest shareholders. So they have a fiduciary duty to their shareholders to evaluate this proposal. And in terms of the actual earnings power of the business, This is a business that is under earning and can make a lot more money. And GameStop is a good blueprint for that. Obviously, you guys thought the business wouldn't be where it currently is, and eBay could be making a lot more money. So there's going to be some leverage on the balance sheet in order to make an acquisition possible, but it's also going to be making a lot more money in the future than it is today because it's going to be run a lot more efficiently. And when a business is not growing users and spending $2.5 billion in sales and marketing, there's a lot of fat to cut. And the earnings power, as we laid out in our investor presentation, could be way higher, double the earnings in a pretty short period of time. And
So that right there is the bull case for Ryan Cohen. And that right there is where I think he should be preaching that much more than what he said at the beginning of the interview. So what he's saying is that eBay is this business that's just been around for a while. It makes a little bit of money. It's making 17% net income margin. And he's saying that we could double that net income very quickly by simply trimming the fat. So he's saying that they're spending $2.5 billion a year on sales and marketing. And he's probably saying, where's that sales and marketing money really going? So there's probably a lot of people at eBay, is what Ryan's thinking, that are just sitting around, not doing much, and just getting paid. And he's saying, we're going to cut that out. And next thing you know, you're going to have eBay making $5 billion on what, a $13 billion a year business, right? Let's look at the numbers here. Yeah, so they're at $11 billion last year. And quarterly, they've been steady climbing quarter over quarter. Q1 2025 was $2.5 billion, then 2.7, 2.8, 2.97, 3 billion. So they're steadily growing that revenue, and that net income, on the other hand, is staying relatively flat because Q1 2025, their net income was $500 million, then dropped to 368 million, 600 million, 528, 512. So how are you still at $500 million in net income each quarter? Meanwhile, you've grown from 2.59 billion in one quarter to 3 billion. So you've grown your revenue by $500 million in 1 year, but your net income has not changed. We could look at the debt. Let's look at the debt real quick. The debt is at 5 billion, jumps to 6.3 billion, 5.99 billion. So it's not like seems like they've been paying off debt. Their shares outstanding has been steadily decreasing. So they're buying back shares. That's a good sign. But what he's saying is there's a lot of people that are working at eBay that probably don't need to be working at eBay. And we could take that out. We can make this business much more profitable. We'll use that money to pay off this crazy debt that we had to take on to do this acquisition. And boom, there you go. You have GameStop. That becomes this eBay plus GameStop business, which pretty much is just going to be eBay because, let's be honest, all the money that GameStop is making right now, they're making about $400 million a year. And that money is probably all from just the 3% from the T-bills from their cash because they got $9 billion in cash. So let's say you're making 0.035. That's $315 million. 3/4 of your net income, let's be honest, is from straight from T-bills. So when this business combines, if it combines, it's going to be eBay just under GameStop, under Ryan's control. And with that, he's going to take out a lot of these executives, these people in sales positions and marketing, whatever's going on there that's costing eBay $2.5 billion a year, which sounds like a lot of money when you consider that they're doing $3 billion a quarter. So annually, they're doing $11 billion. So you're spending 25% of your money on sales and marketing. And where's that money really going? Let's be honest. So that's the case that Ryan has. And I do agree with him on that point, 100%. Now, how is he getting this deal done? That's the tough question. Is he going to be able to get all this capital that he's going to be required from lenders to make this deal actually happen? Because he's going to need a lot more financing. It's not going to be a 50-50 stock to cash acquisition. It's going to be more cash, and by cash, I mean debt, to make this happen. But that's what I got for you guys. I hope you found this entertaining. Hope you found it a little bit informative, helpful, not financial advice. I'm not telling you to go buy GameStop. I'm not telling you to go buy eBay. What I am telling you, though, is to go sign up to feedmetrades.com, where you can track all your option trades. I made this website to help myself and to help others be able to track their premiums from selling covered calls, selling cash secured puts. You can do credit spreads, all that. You can track all of that in feedmetrades.com. Great website. Go check it out. My name is John. I got options. Stay tuned for the next one. Peace.